this is something we've talked about a little bit beforehand, but is it the case that there's been an early Christmas present for mortgage holders from the Reserve Bank? Well, the Reserve Bank governor may have been giving out the Christmas presents, but what about those Aussie banks? Are they passing on the savings to us before Christmas? Well, joining us on the program now from Christian Savings CEO Dan Mazengarb. Dan, kia ora, good morning.
Kia ora, good morning. Yes, a mountain of salvation that maybe has not arrived.
Now we've indicated that things might be going well, but what has been the response on this one? Has in your assessment, is it on message? Is it a little bit underwhelming? What's your thoughts?
To declare a personal interest in that I have a floating rate at the moment, and I'm trying to decide when I'm going to lock mine in. So I have been watching it closely. Look, the big picture is the forecast for the OCR and therefore rates is trending down, and they've got 150 basis points to cover over the next few years, or 12 to 18 months at least. So yes, we should be expecting drops. That is what the market is saying, but I think it was curious that after the last OCR drop of 50 basis points, there was basically no movement from the banks. So I think the lesson in that is, one of two things. Either the banks are slowing the reduction of their interest rates, because obviously they make a bit more margin on the way down. And also they may have actually priced some of that in at the OCR drop before that. So I think that the next one is on the 19th of February. So it will be really interesting to see what happens. Most people will expect the Reserve Bank to drop the OCR again, potentially up to 50 basis points again. And so, I think if the banks aren't moving then there'll be some big questions.
Exactly. Now, I suppose rate cuts are coming, but so is Christmas. Christmas is going to turn up before the rate cuts, and maybe the Aussie banks will have a better Christmas than us. But anyway, moving that to one side, because I don't want to. I know that I don't want to depress you too much on this one, Dan. Let's talk about something more positive, because actually, summertime, not just Christmas, but I know for a lot of people, this will be time to not necessarily do the same stuff that they do every day. Perhaps a little bit of a break from work. Perhaps some New Year's resolutions, time to go home and rethink our lives, and perhaps also our financial strategy. Is our money really working for us? Or perhaps it is time to change banks, to change finance providers. New year, new me, new financial plan, perhaps.
Yeah, look, if you're like me, Andrew, I just get into the tunnel of chaos and busyness at this time of the year, and I can't think anything about anything other than what I've got right in front of me at work or on the family front. So you take that holiday and you start thinking, gosh, maybe I could do things differently. And it is a great time of year to think that big picture and what you're doing. We know that from the data that there are a lot of Kiwis suffering, and there are a lot of Kiwis behind on their mortgages. I've heard rates quote up to 500 to 600,000 people are behind on their repayments. So, this is a good time to take a break, have a look at your debts, what you can and cannot afford, employment prospects and things like that. And I think one thing that is difficult is that a few minor changes to how you operate, whether it be on how you fix your debt or how you manage your credit card, those tweaks sound insignificant, and you brush over them during the year because you're so busy and hectic. But they can add up. So, spending that time over summer to look at those things is such a good opportunity. And I know you probably want to be at the beach eating ice cream, but it is worth taking that time when the pressure is off.
And hey, maybe next year you'll be able to go to a slightly flasher beach and have more ice cream because of the financial stewardship that you've done this summer. Now, part of the challenge for this, whilst we've got more time on our hands, there's a lot of businesses that are shut down, particularly when it comes to mortgage brokers and financial consultants and that type of stuff. Having said that, there's some really good tools and advice available online, some great online tools to help us rejig the finances, or perhaps take an honest look at expenditure versus income, right?
Absolutely. I mean, Sorted is a really good go-to for people thinking about their personal finances. We have a great partnership with Money Sweet Spot, which is a social enterprise helping people get out of debt, high-cost debt. They have a bunch of stuff if you set up an account with them that they can walk you through. So, yeah, there's no excuse. So while you're eating that ice cream sitting on the sunny beach, you can be flicking through on your phone some new tips about how to save money or earn more or manage your situations a bit better.
I've just got this picture of ice cream, sand, getting on your screen. It's not a good look, actually. So
it's not a good look. Don't take holiday advice from me.
Well, no, but hey, when it comes to investment advice as well, I know things are pretty tough for some people, but there may be people in the space who are saying, you know what, how have my investments gone this year? Because we're talking about rate cuts beforehand, return on investment rate cuts, actual interest rates for those people that have got deposits, that have got investments. Those rates are coming down as well, perhaps faster. Perhaps the banks are faster to bring those ones down. So an opportunity for people perhaps to look at where their investments are, look at what their KiwiSaver plan is to see if they have got money set aside, whether or not it's working hard enough for them. That's something that you guys would be happy to have a conversation with in the new year?
Yeah, look, we don't issue financial advice, but we do have a number of advisors out there who are really good on this kind of stuff. And yeah, I mean, the conclusion really is, if you're in fixed interest territory, so bonds or term deposits, we are likely to see those rates drop. So it's a great time to think, shoot, well, before it drops too much, do I want to lock in for longer at a higher rate, or do I want to go into a bit more of a flexible asset class? What's my investment horizon? All those questions are really important to be asking this time of the year.
And hey, personally looking forward to this wonderful image that you've painted. Sitting on a beach, hokey pokey dripping down my arm, phone in the other hand, going through investment advice. Now, you mentioned a couple of websites on this one. Is it sorted.co.nz?
Yes.
And what was the other one that you mentioned, Dan?
Money Sweet Spot, which I think is .com or .co.nz.
Yeah.
And hey, look, I do want to put this out there that there will be a lot of Kiwis struggling at Christmas because it is a tough time on families. If you do find yourself getting out of control, or you've got some high cost debt that you really regret, go check them out. They've got fantastic customer service. They offer a great assistance, and they can help so many Kiwis get out of a tricky debt situation. So go look them up and see if they can help you.
Money Sweet Spot, do check that out. Hey, Dan, appreciate what you and the team have brought to this show over the year. Merry Christmas to you and yours. Thanks for joining us.
Thanks.
Hey, thanks very much for joining us in the Rhema studio. Thanks very much for watching the interview. It's kind of nice to have an audience, actually. And if you did like what you watched, then do give us a like, do give us the thumbs up. And if you'd like to see more interviews like that one, or perhaps even better, subscribe and those interviews will come straight to you. Don't forget to turn on your notifications, and we'll see you in the next one. Cheers.